All right, guys, Bruce from Targeted Wealth Creation back at you this evening for GDXY. It was a nice green today, along with some energy and a few other sector areas. So let's take a look at what transpired. So we've got GDX as the underlying, and GDXY is our YieldMax fund. So we were up 7.6% in GDXY, and we were up 0.59% in GDX. So I've been keeping track because people are always saying we never equal the underlying. So I just wanted to show my latest, which is a count that I've been going back since the fund's been in existence. And I give a 1 or a 0. Basically, I give a 1 to the winner. So if GDXY goes down less, like it did here, back on 522. So if it went down less, it's the winner. If it went up more, it's the winner. And you always have to have a winner, right? So what happened on this day? They went down 1.97, and we, being GDXY, went down 2.25. So I score it like that, and I keep track. So when people say to me, oh, it's underperforming, it's this, it's, 100% of the downside and only 15% of the upside, I've got statistical data to say, no, that's not correct, right? I already know it's not correct, but I just like sometimes to have data. I'm not doing it on all the funds. I just figured this is a newer fund. I'm doing it, and it's easy to do every day. So let's get back into it. So nobody's buying the fund. Remember, people say, oh, I saw somebody on a board say, oh, the metal stocks are so overvalued. I almost choked on my lunch. I was like, are you kidding me? They're at historical lows relative to the metals. I think just this next quarter, you're going to see Newmont, you're going to see Anikio, you're going to see several of the major precious metals funds move up. I think Anikio, AEM is the symbol, right? I never pronounced that name correctly, but Apple Edward Michael, right? AEM. Take a look at that. They produce a lot of silver, they produce a lot of gold. An analyst came out, and I think they're trading at 65, 68 range. I don't have a chart in front of me. And just came out and re-rated them 105. I think Newmont is going to blow its earnings out probably third to fourth week of July. So I'm very bullish on some of these stocks with 30, 40% upside. It's just an unloved sector, and the earnings will grow. And when earnings grow, you get re-rated or upgrades from analysts, and the stocks perform much better. So I'd much rather have that. Now, if we have a massive deflation in the market, it's going to take everything down, but it's going to take down less those that perform. So that's what we had today. No new shares, nothing really going on there. Let's take a look at the weeklies, because with this move, we're getting close, right? We've been winning all the time because it's been flat to slightly down, a little bit of up, and we win our weeklies. Well, we've only gained 2.78 toward, but that's with 4 days. That's fine on 63,000 that we've written calls for. Unfortunately, they're all setting at 34.50. Look where we're trading, 34 and a quarter. So we could blow right by that. I mean, I don't know that there's anything magic this week, but I think that week of July 1, I really expect some movement in the metals. I think silver at 29 something could quickly go to 33 or 34 in the first week, 2 weeks of July, and that's very likely going to pull GDX up. Even though it's made up of gold and silver and copper miners. But anybody that mines any of those products, like silver is typically a byproduct of gold. There are very few pure silver plays. So that's how we look. We look at 1881, 3425. They're both up. Nothing really radical on the chart. I should update this. We need about high 35s to 36 to have just broken out of this bull flag channel. And I think as we near earnings and some more of these analysts re-rating and upgrades, we could get that. So let's look at holdings, and that will tell us. So this move up helped us with this loss, right? I mean, we went down because we're still well underneath the 38, and every day is a time premium decay that we lose in the call. But this also dropped from $4 to $3.72. I think this went from 17 or 19 to 14.5. So this is minuscule and this is big. So look at our day. We went from 667 yesterday to only 626, 569 before, way back here. So we've captured 2.78. We actually gained a hair, right, on this by moving up. You would think, remember, they're caught between, like tomorrow, if we go back to 34 even, then this is going to gain even more. So like I said, I'm not that concerned if we go 34.75 or 35 this week. Yeah, we're going to lose a little bit of money on these, having to buy them back. We wrote, what did we write it at? We wrote them probably around 35 cents. Oh yeah, 36 cents. Okay. So we've really got 34.86 before it cost us a lot. We have to give everything back at 34.86 to 63 grand, but we don't have to go into our piggy bank other than what we just got on Friday to pay additional monies. But on the synthetic, that's going to be very fruitful, right? That's really going to help us. So ultimately, you want that. Let's continue here. So I talked about this. 1881 was our close, and they're saying that we're 4 cents under the NAV divided by the assets. So let's jump into payments. That's kind of the key stuff here that really, tells us how we're doing. So this is doing phenomenally well. Now remember, we had about 6 weeks in this fund. Normally you have your 4-week period, but we only had a partial May, so there wasn't enough to make a June payment. But when you add that together, it helps. So we had $1.07 in total income, right? 34 here and 73 on the other side to give us a 107, but we couldn't pay. Now we've got 50 cents in the short call, and we've got 8 cents in our synthetic, a very small. The issue here, in all honesty, if somebody would buy in the fund and they wrote it, we would make more money on the synthetic. Let me show you what I mean. If you go here to the 38, we haven't written anything since 6.6. Why? No money has flowed in. Again, it's an unloved sector. But it won't be that unloved that much longer. I give it a quarter or two and people are going to be, it's typical. They see the momentum, starts really moving up and they buy. Well, why wouldn't you buy when it's cheap? Oh, you don't know it's going to go up. Okay. So we follow the herd, right? It's a herd mentality. When you get smart and you try and figure out what the smart money is doing, you've already seen central banks for 2 years buy the metals. There's a reason they're buying it. So the miners are just going to perform that much better with these high prices. All right, so as soon as they get bought, look at the difference of they pay $10,000 and they get $37,000. They pay $6,000, they get $47,000. They pay $20,000 and they get $82,000, right? So this is about this ratio, this 4-to-1 type. Now it's more than that in a couple instances, but roughly 4-to-1, a little less there, 4-to-1 here. Guess what that 4-to-1, when I see that? That's how mining companies, the big producers, typically do in a bull market. If you look at the long cycle, you look at what did the metal do? The metal went up 80%. Well, I can tell you that the miners are probably up 320%. If the metal moves up 150%, then your mind, so it's somewhere between 3.5 and 4 for your big guys. Some of the mid-tiers can double that, and some of the little juniors can do a 50x. But again, I don't recommend you run out and buy a bunch of little explorers, because if you don't know what you're doing, 6 of the 10 are going to never go anywhere, except in the top of the bull market. They're all going to move up some, but they really shouldn't have moved up. They didn't do anything other than have silver, gold, or precious, or copper in their name. Some of them are just moose pasture. So the idea is that you want to own these when the metals are moving up, and there's a lot of that forthcoming. And so their earnings are going to move up. All right, so we got up till 719 on that. And again, it's 34.25 from 38, so they can put money in the piggy bank and have a liability, but knowing I fully expect maybe even in July we blow by 38. I mean, don't take my word for it, because I'm not, a psychic. I just feel like the metals are going to run in July. Certainly on silver. Silver is just so undervaluated at this point. Okay, so on payments, getting back, I'm looking, and again, I've learned to be conservative here, especially in these new funds that they don't have a collected base, right? So they got $1 worth of profit, because what did they, well, they didn't pay last month, so they got $1.07 here. We're going to produce right now $1.08. Let's say they lose a little bit on the weekly and it runs by at a small amount. Then we could be back to, 40 cents or something, and then write another week, but our synthetic will drop the paper loss. But I easily see them having $1 just from the previous month to pay out, and then they save more reserve here. Well, and I think they're going to look at this fund and say, well, geez, the IV on GDX is, 34, whatever it is, it's low. But that's because it hasn't really performed lately. So I could see them paying us 84 cents, which right now is half of all the money they have in the door on the 2 months, right? You add this up and you get 165. So this would be, 168. So, but it corresponds to what I think they'll target the IV. Do I hope they pay $1? Absolutely. But it's just hard to know. It's always up to YieldMax. Really, they make that determination. And sometimes I can give you all the data that says how much they have to pay out of, but ultimately it's their rationale. It's a new fund. I think they're looking at it going, we know it's going to catch on when GDX takes off, but maybe they pay it $1 and entice some YieldMax people to say, hey, maybe I should take a little off the table in NVIDIA or Misty or Coney or some of the high flyers, right? And maybe I should own another sector. So that's what I got for you guys. I think there's a lot I can help you with here and point out things as we move through, because I traded this for a whole decade back in 2000 to 2011. So anyway, again, this is not financial advice. I'm not a financial advisor. This is for fun and entertainment. Okay, guys, see ya. Bye.